Picture this. You sit down at your desk, charts are clean, indicators are aligned, you feel focused, prepared, maybe even powerful. You've done the work, you've read the books, you've followed the rules, you take the trade, and 7 minutes later, you're stopped out. Then the price turns around and rockets in the direction you predicted. You whisper to yourself, again. You wonder, was it just bad luck? Was your strategy flawed? Or deep down, was the market watching you? Here's the truth most traders will never admit. You're not trading the market is trading you. What if every clean setup wasn't an opportunity but a trap? What if your confidence was the very signal the market needed to move against you? What if all the logic, all the technicals, all the back testing have been used to make you predictable? And in this game, predictability is fatal. Welcome to the invisible arena, a psychological battlefield where price is just the surface, but beneath it, power games, emotional manipulation, behavioral traps designed by players you'll never meet. This isn't a trading tutorial. This isn't financial advice. This is your reprogramming. Because trading isn't about setups, it's about survival. And the ones who survive don't just follow strategy, they understand the game. So let me ask you, are you ready to stop being the piece and start becoming the player? Every time you open your trading platform, you step into what you think is a neutral space. Candles, indicators, levels. You believe it's about logic. You believe that if you just follow your rules, the outcome should follow. But what if that space isn't neutral at all? What if every click you make is being watched, measured, anticipated? What if you're not making moves, you're reacting to a script someone else wrote? Welcome to the real market, not the one they teach you in books, not the one shown in tidy back tests, but the invisible arena, a psychological simulation so advanced it makes you believe you're in control right before it strips that illusion away. Let's make this clear. You're not trading, you're being played. The game begins with patterns. You're taught to spot them. Flags, wedges, breakouts, confluence. You think these patterns are universal truths, timeless edges. But in the invisible arena, patterns don't predict price. Patterns predict you. Because once a pattern becomes popular, it stops being a signal and starts being bait. Let me paint the picture. You're in a dark arena. Thousands of traders surround you. You can't see them, but they're all watching the same chart. Everyone's reacting to the same breakout. Everyone's placing stops in the same place. Everyone's thinking, this is it. And that's when it happens. The move that was supposed to happen doesn't. The breakout fails. The stop gets hunted. The reversal is violent. And you're left blinking at the screen, wondering what you did wrong. But you didn't do anything wrong. You just did exactly what they expected you to do. Because in this game, your emotions aren't just weaknesses, they're entry signals for someone else. Your hesitation is their green light. Your stop loss is their buy limit. Your need for confirmation is their opportunity to trap you. And the most brutal part, you feel like it's your fault. You feel like you're failing, but you're not failing at trading. You're failing at recognizing the game. Let's talk about Jaden. Smart guy. Our guy graduated with honors in economics, built a perfect back-tested algo based on clean breakout patterns. He followed the rules until he went live, and the same patterns he trusted betrayed him repeatedly. He'd enter on a breakout, price would spike, then reverse. He'd go long on support, price would respect it for seconds, then crash. He'd double-check his data, tweak the strategy, retest, but the same thing kept happening. Until one day, in frustration, he looked at the liquidation chart and saw something horrifying. Hundreds, maybe thousands of traders got stopped out at the exact same level as him. That's when it hit him. He wasn't trading a strategy, he was part of someone else's. Here's the real game theory. The market doesn't reward those with the best tools. It rewards those who understand how others behave. Institutional traders aren't necessarily smarter. They're just not reactive. They study human emotion the way predators study prey. They know how fear looks on a chart. They know how overconfidence feels in volume. They don't need to see your plan. They just need to know what you think is safe, because that's where you'll click, and that's where they'll strike. Every candle is not a pattern. It's a move in a psychological chess game. Every stop is not protection, it's an invitation. Every confirmation is not proof, it's a seduction. Let that sink in. You're not just battling price, you're battling intention, hidden agendas, invisible predators. And your tools, they're visible. Your habits, documented. Your reactions, predictable until they're not. So here's your first tactical shift. Before you enter any trade, ask, who benefits if I click this? Whose exit am I becoming? Because in this arena, it's not about setups. It's about strategy. It's not about being right. It's about being unrateable. It's not about technical perfection. It's about psychological positioning. The next time you feel certainty rising inside you, pause. Because that's exactly what the market wants you to feel, right before it punishes you. The question now is, are you willing to let go of the illusion of control and start learning how the real game is played? If the answer is yes, then you're ready for the next truth. And it's not easy to swallow, because if you think someone out there wants you to win, you're about to see how wrong you've been. Let's stop pretending. You might believe this is a fair game, that somewhere deep in the system there's a hidden justice, that if you put in the work, follow the rules, stay disciplined. But the truth? No one wants you to win. Not the market, not your broker, not the guy in the Discord group sending signals, not even the friendly trader commenting "gah" under your chart on Twitter. Because in the invisible arena, everyone is playing for themselves. And the moment your win conflicts with their exit, you are the one who gets sacrificed. It's not personal, it's just math. In game theory, there's a concept called the prisoner's dilemma. It shows that even when two people can win together, they'll often betray each other because the fear of being betrayed first is greater than the hope of mutual success. Let that sink in. Even in situations where collaboration benefits everyone, betrayal is mathematically optimal. And this is how the market works. Let me give you an example. Two hedge funds form a silent alliance. They plan to pump a low liquidity token, push it hard, ride the wave, then dump it. Phase one. They both start buying. The chart explodes. Retail floods in. Twitter lights up. Influencers post rocket emojis. New paradigm, they say. Buy the breakout, they shout. And right when liquidity peaks, one of the hedge funds exits silently. The other, still in, still believing, still trusting. And then price collapses. The second fund gets wrecked. Retail gets wiped. And only one party walks away whole. Was the alliance real? Only until it wasn't. That's the game. No one in this arena is loyal, not for long. And every handshake is temporary because when profit is on the line, self-interest always wins. You felt it. You joined a signal group. You followed the same setup. You entered when they said enter, and it reversed the second you did. Then they bragged about profits while you sat in drawdown. That wasn't coincidence. That was harvesting. You weren't invited to win. You were invited to fund the win. So what does this mean for you? Should you isolate yourself? Trade in a cave? Never trust anyone again? No. But it does mean this. You must stop following blindly. Stop seeking consensus. Stop craving agreement. Stop confusing community for protection. Because in trading, community is vulnerability. It feels good to belong. But the moment you act on that feeling, you've given up your edge. You've surrendered your timing. You've given others control over your outcome. And in the invisible arena, that's the same as death. Let me ask you a hard question. Have you ever felt left behind while everyone else was winning? Did you chase their move only to find yourself underwater while they cashed out? Did you tell yourself, next time I'll be earlier? Next time I'll join the signal right away? But what if you weren't late? What if you were never supposed to win that trade in the first place? What if your belief in the group was the setup and the exit was already planned? Just not for you. Here's your new protocol. Create two watch lists. List A, what everyone's watching, the hot stocks, the hyped setups, the levels being tweeted and retweeted. List B, what no one's watching, the quiet zones, the ignored pairs, the second-tier opportunities. Now, trade the second list. Let the crowd provide the volume, the liquidity, the emotional fuel. And you use it to exit, not enter. Because in this arena, the winners don't seek trust. They seek clarity. They don't move with the herd. They move after the herd reveals its position. and only when the moment is ripe to strike. And here's the deeper level. You don't have to hate the crowd. You just have to understand that the crowd is not your friend. It doesn't care about your stop loss. It doesn't care about your dreams of freedom. It doesn't care about how many hours you studied. The crowd is a mechanism, a machine. It reacts, it hopes, it overcommits. And you watch, you wait, you let the illusion peak, then you act. Because in the end, this isn't a morality contest. It's a strategy war. And strategy doesn't reward trust. It rewards discipline in betrayal's shadow. Ask yourself, have you been trading for approval or for advantage? Have you been seeking agreement when what you needed was awareness? Because the truth is this, until you stop playing their game, you'll keep being their liquidity. In war, if the enemy knows your next move, you're already dead. In poker, if your patterns are obvious, your bankroll is already gone. And in trading, if the market can predict what you'll do next, it will punish you for it. That's not theory. That's inevitability. Let me explain why. Humans crave routine. We're wired for repetition. We find comfort and rhythm in doing what works. We build habits, systems, rituals, and in life that helps. But in trading, it makes you easy to read because in the invisible arena, you're not just making trades, you're leaving footprints. Your favorite setup, the time you usually trade, the confirmation you always wait for, the emotional trigger that always makes you click. Every time you repeat that sequence, the market sees you more clearly. And once the market sees you, it sets the trap. Let's talk about Max. Solid trader, smart, disciplined, had a clean edge, a 3-candle reversal pattern right near support, backtested well, great win rate, worked for months until one day it didn't. He started getting stopped out again and again, same pattern, same entry, same structure, but it was like the market had evolved, like it knew what he was about to do, because it did. He had become visible, and visible traders get deleted. That's when Max made the shift. He didn't abandon his system. He transformed it. He created variations on purpose. Sometimes he entered on the second candle instead of the third. Sometimes he waited for the fourth touch. Sometimes he skipped the setup entirely just to break his own rhythm. He still followed his rules, but his execution became dynamic, unreadable, unpredictable, deadly. And guess what? His win rate exploded. Not because he found a new edge, but because he stopped being easy to trap. This is the heart of strategic unpredictability. It's not about random trading. Randomness is chaos. It gets you killed. Unpredictability is organized asymmetry, variation with structure, freedom within the system. Think of a jazz musician. They know the scales inside out, but they never play the same solo twice. That's how you trade now. Your system is the scale. Your execution is the solo. Let me give you the strategic unpredictability framework. Threshold 1, time variation. Let's say your setup appears at 9:30 a.m. Create 3 responses. 40% of the time, trade immediately. 30% of the time, wait 15 minutes for confirmation. 30% of the time, skip it entirely and wait for a second touch or a session close. Same edge, different tempo. Untrackable. 2, market rotation. Don't stick to the same pair or asset week after week. Week 1, trade E or USD. Week 2, trade indices. Week 3, move to gold. Why? Because algorithms track behavior across assets. Disappear from the radar, reappear where they're not looking. 3, phantom trades. Keep a log of setups you purposely don't take, right? Today I stay invisible. This conditions your mind to choose not to trade, which makes your real entries more intentional, less reactive. 4, size variation within risk. Always risk want, but vary the structure. Trade A, tight stop, larger size. Trade B, wider stop, smaller size. Trade C, full 2% on A plus setup with deep confluence. To the outside world, your trades look inconsistent. To you, they're strategically flexible. And here's the kicker. Have you ever passed on a trade because it looked too perfect, too clean, too obvious, and then it failed anyway? That wasn't fear. That was intuition. That was your subconscious screaming, if I can see it, so can they. Here's what most traders get wrong. They think discipline means doing the same thing every time. It doesn't. Discipline means following a system that can adapt without losing its core. Think of it like this. Random is weak. Routine is exposed. But dynamic within boundaries, that's lethal. So ask yourself, are you training to be a machine or are you training to be a ghost? Because the market can exploit what it can see, but it can't trap what it can't pattern. And when you become strategically unpredictable, you stop being a target, you start becoming the architect. Now, let me ask you, have your patterns become your prison? Have your habits become your leash? Is your system just another predictable loop? If so, it's time to break the rhythm, because the moment you can't be read, you can't be stopped. The most dangerous trades aren't the ones you miss, aren't even the ones that lose. They're the ones that almost work. Look, the ones that look perfect, feel perfect, lure you in with flawless structure, textbook volume, laser clean confirmation, only to collapse in your face the moment you enter. You sit there stunned. How could that have failed? Everything aligned. And that's exactly why it failed, because it was never real. It was a bluff. If you think bluffing is just for poker, think again. Bluffing is everywhere in the market. It's not a bug, it's the system. In the invisible arena, bluffing is psychological warfare. It's not about lying, it's about shaping your perception, just enough to make you act first. And the moment you act, they flip the script. Let me paint the picture. A big red candle slams through support. Volume spikes, Twitter explodes, breakdown confirmed. Thousands of traders short the move. Your gut says go. The chart says it's time. But beneath that candle is a hidden pool of institutional buy orders, liquidity waiting to be triggered. And once enough retail shorts flood in, the market rips upward, stops get obliterated, the bluff succeeds. Not because it was true, but because it looked true long enough to make you believe. Let me introduce Zoe. She was a price action purist. No indicators, no gimmicks. Just clean levels, volume, and candle patterns. She had confidence, she had edge, until one day it all started breaking down. Perfect setups failed, volume lied, support turned to dust. She blamed herself until she started asking one different question: who benefits if I take this trade? And that changed everything. She realized her clean setups weren't just setups, they were bait. Designed not for execution, but for provocation. Because smart money doesn't need you to lose, they just need you to move. They need you to reveal your hand. They create a convincing scenario, not to beat you with logic, but to beat you with your own expectations. They bluff the chart, so you reveal your psychology. So, how do you see through the bluff? How do you stop mistaking deception for confirmation? Here's Zoe's bluff detection protocol. 1. The too perfect setup. If it looks like it belongs in a textbook, pause. Perfect entries are rarely real. True opportunity often comes wrapped in imperfection because smart money makes it messy on purpose. 2. The volume tell. Big spike in volume on a breakout, look closer. Is it sustained? Is it gradual, institutional, or sudden, retail panic? Sudden volume often marks the end, not the beginning. Bluff complete. 3. The social media echo. If everyone is tweeting about a level, it's already compromised. If the setup is viral, it's vulnerable. Smart money doesn't trade consensus, they harvest it. Zoe stopped reacting to moves. She started reading them. She looked beyond price action and into intent. Who's likely trapped? Who's profiting if I'm wrong? What narrative is being sold here? Because bluffing works by hijacking one thing: your conviction. Let me ask you something hard. Have you ever chased a trade because it looked too obvious to fail and it failed instantly? That wasn't a bad read. That was a perfect bluff. You weren't stupid. You were predictable. And here's the scary truth. You can bluff the market too. Not with lies, but with invisibility, by not reacting when they expect you to, by placing limit orders where it hurts instead of where it feels safe, by holding bias through noise and staying silent when others scream. Power isn't always shown. Sometimes power is quiet. That's why the strongest traders seem unbothered, because they've trained their bluff radar. And now it's time you trained yours. Here's your bluff radar homework. Start a too perfect journal. Track every setup that looked flawless and failed. Write what it looked like, then write what it did. Every time you feel 100% confident, pause. Ask, what am I not seeing? Confidence is where deception hides. Visualize the inverse. For every bullish signal, find 3 bearish interpretations. Not to paralyze yourself, but to stay flexible in ambiguity. Because when you can entertain the opposite, you're no longer emotionally attached. And without attachment, you become immune to bluffing. The market doesn't punish inaccuracy, it punishes certainty that came too soon. So let go of the need to be right and train your eye to see the psychological bait behind the chart. Because once you can see the bluff, you're ready to move beyond defense and into the next power move, timing. Imagine two traders looking at the exact same chart, same levels, same structure, same opportunity. One of them has 10 years of experience, institutional training, and a cutting edge system. The other, just a couple years in. No mentors, no flashy tools, but one thing the pro doesn't have right now: patience. So the experienced trader strikes first. Quick execution, strong conviction. Meanwhile, the second trader waits, quiet, focused, watching. He doesn't need to predict the move. He just needs to let the first trader reveal the plan. And when the move breaks down, that second trader enters, calm, clean, surgical. Guess who wins? Not the smarter one, not the faster one, the one who timed it better. In the invisible arena, talent isn't rare. Discipline isn't even that rare anymore. But timing, that's a ghost skill. The kind of edge you don't notice until it destroys you. Because this game doesn't reward speed. It rewards patience under pressure. The restraint to not flinch when everyone else does. The calm to watch a perfect setup run straight into a trap and let it pass you by. The clarity to know, this isn't my entry, this is their test. Let me introduce you to Julian. Julian had what most traders would envy: fast execution, sharp analysis, fearless confidence. But Julian was addicted to being first. First into breakouts, first to call the reversal, first to jump on any new trend. And sometimes it worked, but most of the time, he became the prototype of the problem. The classic first mover, predictable, early, expendable. Until one day it clicked. He reviewed his journal. He noticed something haunting. All his best trades, the smoothest ones, the ones that hit target quickly and without pain, were the ones where he waited. So he changed everything. He built what he called the second wave protocol. Wave one, the obvious move: a breakout, a breakdown, a news spike. Let it happen. Let the crowd flood in. Don't act. Observe. Price stalls, volume dips, the hype dies down. This is where most retail traders are trapped: emotionally committed, financially exposed, psychologically vulnerable. Wave two, the real move. Now comes the real opportunity. After the weak hands are flushed, after the fake narrative breaks, this is your moment. This is where the professionals enter. Why does this work? Because markets don't reward initiative, they reward initiative after information. This is what game theory calls sequential play. In chess, the first move sets the tone, but it also creates vulnerability. The second player, they wait, they observe, and then they counter with clarity, with structure, with deadly timing. Want proof? Study order flow around breakouts. Research shows 75% of breakouts fail on the first attempt, but on the second attempt, the success rate jumps to 68%. Why? Because the trap has already sprung. The weak hands are out, the liquidity vacuum has passed, and now the path is clear for those who waited. Here's your timing optimization protocol. 1. The 15-minute rule. When you spot a setup, set a timer. 15 minutes. Don't act until it expires. During that time, watch who enters. Watch where stops cluster. Watch how price responds, not just how it moves. Most of the time, the picture will completely change. 2. Build a reaction map. Start documenting not just price levels, but emotional reactions around those levels. Where do people panic in? Where do they flinch out? Those zones, that's where your edge lives. 3. The patience paradox. The harder it is to wait, the more valuable waiting becomes. If every bone in your body screams, "This is it, enter now," that's usually your ego talking, your fear of missing out, your anxiety of being left behind, your need to prove something. But the elite trader, he's already disconnected from that need. He knows, if it's real, it will wait for me. Have you ever been early on the right idea and still lost? That wasn't bad luck. That was timing misalignment. You saw the future, but you entered before the world was ready. And in this game, Truth too early is still punished. Let me tell you what the pros know. The real edge isn't in seeing the move, it's in seeing who moves first and letting them expose their weakness. Because the first mover, they commit with incomplete information. But you move after the narrative is revealed, after the trap is confirmed, after the bluff collapses. You don't predict, you exploit. So ask yourself now, are you trading to be right or are you trading to be ready? Do you act to prove something or do you wait and punish those who act too soon? Because once you master time, you don't just win, you make others lose by default. There's an old story from war. A general leads his army across the sea to face a brutal enemy. They land on foreign shores, outnumbered, outarmed, outpositioned. His men set up camp, some sharpened swords. Others look back at the ships they arrived in, just in case they need to retreat. And that's when it happens. The general gives a simple, unthinkable order: burn the boats. Confusion, panic, but then clarity. There is no turning back. Win or die. That moment is more than a battle tactic. It's a psychological transformation because when you eliminate the option to retreat, you unlock the full force of commitment. And in trading, just like in war, that paradox is where true freedom lives. Most traders don't fail because they lack skill. They fail because they trade with one foot out the door. They leave emotional back doors open. They risk money they can't emotionally afford to lose. They say they'll hold the stop, but when price comes close, they move it just a little, then a little more, until it's gone. And now, so is the account. Let me introduce you to Ravi. He wasn't a bad trader. He was actually good. He understood risk, he had a system, he journaled his trades, but he had one fatal flaw: attachment. He needed his trades to work because every trade wasn't just a position, it was his self-worth, his future, his validation. So he'd place a stop, then adjust it when it hurt. Just a few more pips, just until it comes back. It never did. After blowing his third funded account, Robbie did something radical. He took his $10,000 account and moved $7,000 into savings. Gone. Off limits. He decided, I will only trade the remaining $3,000, not because I lack capital, but because I need emotional freedom. Then he created rituals. After entering a trade, he unplugged his mouse. He wrote on paper, I choose to risk $30 on this trade. I accept all outcomes. He taped it to the monitor. He walked away. And suddenly, everything changed. His stops held. His targets hit. His psychology stabilized. Why? Not because he found some magic edge, but because he lowered the emotional cost of being wrong. Game theory calls this concept credible commitment. If your opponent knows you can't back down, they're forced to adjust. But in trading, your opponent isn't just the market, it's you. Your fear, your hesitation, your need to be right. The market feeds on desperation. It senses when you're overexposed, when you need a win, when a loss would break you, and it exploits that relentlessly. That's why hedge funds risk small relative to their capital, not because they're cautious, but because they need distance. They don't trade like they need the money. They trade like they need the clarity. And that clarity, it lets them act with cold, controlled precision without the emotional weight. So how do you reach that level? How do you burn the boat? Here's your freedom formula. Step 1, calculate your sleep easy size. Ask, what loss could I take today and not care tomorrow? That's your max risk. Step 2, cut that number by 40%. Yes, 40%. Shrink it down until your brain says this doesn't matter. That's your actual risk. Step 3, double your targets. You're still hunting reward, but now you're doing it with no fear. Same potential upside, radically less emotional exposure. Step 4, create commitment rituals. Physically sign your risk per trade. Take a photo, stick it next to your screen. Make it real, make it sacred. Have you ever held a winning trade longer because the size was smaller, or managed the trade better because it didn't matter? That's not coincidence. That's the freedom paradox at work. The less you need the trade to win, the more power you have to let it win. So here's your new edge. Lower your downside until losing doesn't scare you. Because when you're no longer afraid to lose, You trade like a ghost. You act with indifference. You win with silence. The market doesn't respect hope. It doesn't reward effort. It respects one thing: the trader who doesn't need it. So ask yourself, are you trading with fire behind you? Or are you still staring back at the boat? Because as long as retreat is an option, clarity will never be your weapon. When you burn the boat of desperation, you unlock the ship of precision. And when you combine that detachment with strategic timing, you become unstoppable. But there's one more place traders still get slaughtered, not because they're wrong, but because they stand exactly where everyone else is standing. It's time to uncover the magnetic traps of the crowd. Every chart has places that feel magnetic. They're not marked by indicators, they're not whispered by insiders, and yet price keeps returning again and again. You feel it, the tension, the buildup, the certainty. This is it, you think. But you're not the only one thinking it. And that's the problem, because the level that feels obvious to you feels obvious to everyone else. And that's exactly where the slaughter begins. Let me introduce you to a concept from game theory: the Schelling point. It's a spot where people naturally align without coordination, without communication, simply because it feels like the right place to meet. In trading, Schelling points are where the crowd gathers emotionally. Round numbers, previous day's high or low, clean trendline bounces, perfect fib levels, equal highs, equal lows. They all scream, this is where we enter, this is where we defend, this is where we stop. And so everyone does. And the market, it doesn't reward this unity, it harvests it. Let's make this real. You go long, prices ranging, coiling, building energy. Everyone's watching the same resistance. Clean zone. Psychological number. Confluence. Price pushes through. Breakout traders pile in. Stops get tucked neatly under the last swing low. It looks perfect, but then price violently reverses, dives downs, hits stops, flushes liquidity, and then, like clockwork, rips back upward without you. You feel betrayed. You feel cheated, but you weren't cheated. You were predictable. You showed up to the meeting point and forgot you weren't alone. Let's talk about Sasha. She loved clean setups, volume at structure, clear levels, confirmed moves. But over time, her edge began to die. She wasn't just losing, she was getting harvested. Her breakouts became others' exits, her stops became their entries. And once she zoomed out, she saw the game. She wasn't trading levels, she was trading consensus. And consensus is fuel for the predator. So she built what she called the trap detector protocol. Before she entered any trade at a well-known level, she asked, 1. How many times has this level been tested? More tests, more eyes, more predictable reactions. 2. How clean is the structure? If it looks too textbook, it's likely already compromised. 3. How loud is the crowd? If it's being shared in groups, hyped on Twitter, or mentioned in chats, it's no longer a level, it's a Schelling point. And Schelling points aren't for entries, they're for exits. So here's what Sasha did instead. She started placing limit orders beyond the obvious level, 2 to 3% away, past the trap, past the noise. She'd let the crowd trigger first, let them run into the buzzsaw, let price do its dirty work. And only after the smoke cleared, she entered. Calm, quiet, clear. She stopped trading at the level. She started trading around it. She let the herd generate the momentum, then took the other side. And everything changed. Here's what you must understand: the more obvious the level, the more likely it is to fail on the first touch. Why? Because smart money doesn't move price randomly, they move it strategically. They know where your stops are, they know where you'll defend the zone. They know you think it's safe, so they let you build a house at the edge of a cliff, and right when you feel secure, they cut the ground out from under you. Avoidance protocol. 1. Assume every clean level is a trap until proven otherwise. 2. Fade the first move. Don't buy the breakout. Wait for the failure. Enter the second wave. 3. Ask, where would I place my stop if I were average? Then place it somewhere else. Be where they're not, because where everyone is aligned emotionally, price is coming for them. Have you ever felt like price moved against you personally, like the market was watching your trade? It was. Not you individually, but your pattern, your timing, your consensus. And when thousands of people act the same way, they don't need a reason to lose. They just need a level to crowd around, and the market does the rest. So ask yourself, are you trading levels or are you trading crowd psychology? Are you still entering where it feels safe? Or are you learning to wait in the shadows until the crowd becomes your exit liquidity? Because if you're still showing up to the same party as everyone else, you're not the guest, you're the feast. But avoiding the crowd isn't enough. There's one more predator waiting, and it doesn't hunt your setup, it hunts your mind. The next enemy is subtle, dangerous, deadly. It's what you think you know. They say knowledge is power, but in trading, what you know is often your biggest weakness. Because in the invisible arena, you're not just trading charts, you're trading expectations, you're trading stories, you're trading your belief in what you think is true. And when the market senses that belief, it uses it to break you. Let me explain. Game theory has a brutal concept: games of incomplete information. That means you're playing, but you don't fully understand the rules. You don't know who the players are. You don't even know what's really at stake. Worse, some of the information you think you have was planted on purpose. You see a headline, CPI better than expected. You smile, bullish, futures spike, Twitter celebrates, you enter long, price collapses, fast, brutal, confusing. You stare at the screen, you whisper to yourself, that doesn't make sense. But it does, because you didn't trade the news, you traded your interpretation of it. And more importantly, you traded what everyone else already knew. This is the trap. Markets don't move on truth, they move on surprise. And the more widely known something is, the less valuable it becomes. Because the market isn't waiting to react to facts, it's reacting to your reaction, to your emotion, to your bias, to your predictable conviction. And that makes knowledge dangerous. Let me tell you about Kareem. He built his entire edge around economic news. Every FOMC, every NFP, every CPI drop, he logged it all, built models, found patterns, believed he had cracked the code, but the deeper he went, the more he lost. Why? Because he was always trading what was already priced in. His data was right, but the timing was wrong. He wasn't just late, he was being fed. Smart money doesn't trade the data. They trade how you'll respond to it. They don't care what CPI is. They care how far off it is from expectations and how positioned the crowd is in anticipation. They're playing third order thinking, not what I think, but what you think I think, and how I can use that against you. Here's Kareem's realization, and it changed everything. The market doesn't punish ignorance. It punishes overconfidence, especially when that confidence is public and shared. So he built what he called the information skepticism framework. One, first order information. The CPI number is 3.2%. Market impact, 0. Already priced in. Two, second order information. CPI was lower than expected. Market impact, moderate. Initial move begins. Three, third order information. How are traders positioned going into the release? Market impact, maximum. This determines the real move because it's not the data. It's the expectation of the expectation. And this applies far beyond fundamentals. It infects technicals too. You see a perfect breakout pattern, volume confirms, momentum is building, your RSI is in the sweet spot. So you enter and price slams down. Why? Because that pattern was a mirror. It didn't reflect opportunity, it reflected your bias, and someone else was watching you. Watch it. So how do you protect yourself? You stop needing to know, and you start staying fluid. You build information skepticism into your process. Here's how. 1, for every bullish signal, write 3 bearish interpretations, not to paralyze yourself, but to remain flexible in ambiguity. 2, for every sure thing, ask, who benefits if I believe this? Who gets paid if I'm wrong? 3, replace is this true with how many people already believe this? Because if the answer is too many, it's likely a trap. And most importantly, detach your identity from your thesis. You're not here to be right. You're here to be adaptive, because the market doesn't reward logic. It rewards fluidity. Have you ever clung to a trade because the chart should bounce? Have you doubled down because the news was good? Have you whispered to yourself, this doesn't make sense? It made perfect sense. You just didn't realize the game wasn't about truth. It was about reaction.
Oh,
So ask yourself now, are you trading the market or are you trading your illusion of control? Because until you let go of what you think you know, you'll keep being used by those who know how you'll react. And once you break that chain, you're ready to move deeper into the real game. Positioning, specifically, how the most lethal traders win, not by acting fast, but by moving second. In most games, the first move feels like power in chess, in war, even in business. Make the opening strike, grab initiative, control the tempo. But in the invisible arena, moving first is often the trap. Because when you move first, you show your hand, you expose your edge, you become visible, and visibility is vulnerability. Let's be brutally clear, first movers get hunted. Breakout traders, news chasers, signal followers, they enter fast with confidence, with volume, and the market thanks them by feeding off their stop losses. But the second mover, the one who waits, the one who watches the chaos unfold, the one who lets the crowd commit first, that's the one who wins. Because in the invisible arena, you don't want to initiate the move, you want to punish it. Let me show you. A breakout happens, clean structure, strong volume, momentum building, traders pile in, Twitter lights up, moon mission. You don't flinch, you watch. And when price fails to follow through, you strike, not with hope, with precision, not to catch the move, but to profit from the trap. Let's meet Mikkel. He was addicted to being first. He called tops early, entered breakouts early, sniped reversals with pride. Sometimes he nailed it, but most times he became the liquidity. Then he built a new protocol, the Shadow Protocol, and it changed everything. Step 1, create 2 watch lists. List A, crowd favorites, hot tickers, hyped setups, Twitter buzz. List B, after the storm, failed moves from list A, emotional wreckage, liquidity cleansed. Step 2, the 48-hour rule, never trade crowd favorites immediately. Let the obvious move fail. Let retail bleed, then trade them 1 to 2 days later. Why? Because the herd is gone, the emotional distortion is gone, and what remains is opportunity. Step 3, the second wave entry, let wave 1 happen without you. Let the fake out complete. Let the overreaction exhaust. Then enter wave 2, the real move. Now you're not reacting, you're not guessing, you're not chasing, you're exploiting the aftermath. This is how professionals operate. They don't chase breakouts. They watch where the first traders get in, then position where the first traders get wrecked. Because guess what? Research shows 75 of breakouts fail on the first attempt, but the second breakout, success rate jumps to 68%. Why? Because by then, the weak hands are gone, the predictable are eliminated, the crowd has stopped watching, and that's when real opportunity appears. Here's your second mover implementation checklist. The 15-minute timer. See a setup? Set a timer. Don't enter until it expires. During that time, watch price behavior, identify stop zones, see who jumps first. Often the picture will change completely. The reaction map. Start journaling not just levels, but emotional reactions. Where did retail pile in? Where did they panic out? These are the footprints, and your job, follow them to the pain, because where pain happened once is often where reward waits next. The patience paradox. The harder it is to wait, the more powerful that waiting becomes. If every fiber in your body screams, enter now or you'll miss it, that's your signal to pause, because emotion is not an edge, it's a tell. Have you ever said to yourself, I knew it was going to reverse, I just got in too early? That's the voice of a first mover in regret. Now imagine, you wait, you watch, you let the chaos burn itself out, and then calmly, ruthlessly, you strike. That's the second mover's edge. Here's the truth. It's not about being right, it's about being last, on purpose. The second mover isn't slower, he's sharper. He doesn't react emotionally, he responds strategically. He lets others reveal their cards, then plays the hand they never saw coming. So ask yourself, are you chasing the move or setting up the trap that punishes it? Are you hunting setups or watching reactions and stalking vulnerability? Because if you still believe being early means being smart, the market will use that eagerness against you every time. But what happens when you do all of this? You move second, you wait for the trap, you act with clarity, and you still lose? Not because you were wrong, but because you expected the market to reward you. That's the final illusion. and it's the one you must destroy. You did everything right, you waited, you followed your rules, you didn't chase, you moved second, you timed it perfectly, and the market still slapped you. Why? Because you made the one mistake no technical analysis can fix, no strategy can defend against, no journal can prepare you for. You believed the market was supposed to be fair. It's the most seductive lie in trading. If I do things the right way, I should be rewarded. But the invisible arena doesn't operate on justice. It operates on liquidity, emotion, and opportunity. It rewards randomness. It punishes logic. It exalts patience today, then demolishes it tomorrow. Not because it doesn't care. Let me show you something from behavioral economics. It's called the ultimatum game. Two players are given $100. Player A decides how to split it. Player B can accept or reject. If B rejects the offer, no one gets anything. Logically, B should accept any amount, even $1, because $1, $0. But most people, they reject unfair offers, even if it means losing everything. Why? Because we'd rather get nothing than feel insulted. Fairness isn't just a value, it's an emotion. And in trading, it's a trap. Let me tell you about Dana. She journaled obsessively, waited months for a clean swing setup, perfect conditions, flawless structure, every rule followed. She risked 1%, set a logical target, held her stop, and the trade failed. Not because of a mistake, but because of random noise, a liquidity sweep, a flash news headline, an algo-driven flush. And she wasn't just disappointed. She was shattered, because she'd been trading with a belief so deep she didn't even know it was there. If I do it right, I should win. And that belief was her undoing. Let me tell you what the pros already know. The market owes you nothing. Not a bounce, not a reward, not even logic. This game doesn't care about effort. It doesn't track fairness. It doesn't pay you back. It simply reflects behavior. And when you understand that, you get free. So Dana created a new framework. She called it the Unfairness Protocol. It wasn't about being stronger. It was about being unattached. Here's what she did. 1. Daily affirmation. She wrote it by hand every morning. The market owes me nothing. I owe myself everything. She read it before every session, not as motivation, as immunization. 2. Trade journal rewrite. For every losing trade, she stopped asking, was this fair? Instead, she asked, how did I execute? She judged herself by process, not outcome, because fairness is fleeting, but execution compounds. 3. The 100 trade perspective. She zoomed out, way out. Instead of needing every trade to feel justified, she looked at her equity curve over 100 trades, over 200 trades, and over that distance, fairness doesn't matter. Adaptation does, because here's what the invisible arena teaches you. Your best trades will lose. Your worst setups will sometimes win. And the illusion of justice, it will keep you fragile. If you believe you deserve a win, every loss feels like betrayal. But if you believe the market is just chaos and your job is to act with clarity inside that chaos, you become untouchable. Ask yourself, have you ever taken a perfect setup and then told yourself that shouldn't have happened? Have you ever journaled a loss and felt insulted by it? Have you ever whispered, that's not fair? That's your pain talking. But pain isn't weakness, it's a teacher. The market doesn't care about your plan. It cares about how you respond when that plan is tested. It doesn't care about your confidence. It cares about how you perform when confidence is gone. It doesn't reward justice. It rewards resilience. So here's your new edge. Stop seeking fairness. Start mastering emotional durability. Let go of what should happen. Anchor yourself in what is. Because the moment you stop expecting fairness, you gain access to clarity. You start asking better questions. You stop reacting to noise. You trade from identity, not entitlement. And when randomness doesn't rattle you, you become lethal. Here's your final internal shift, from victim to strategist, from emotional to intentional, from someone who trades to be proven right to someone who trades to play the game well. Because once you let go of the need to win today, you start building the edge that wins forever. And that brings us to the final transformation. Now that you've seen the game, walked through the traps, rewired your timing, your commitment, your identity, what's your next move? You've walked through the illusions, you've seen the games within games. You now know this isn't a strategy contest. It's a psychological battlefield where emotion is bait, where knowledge is weaponized, where timing isn't just important, it's everything. You've learned how the professionals really move. You've seen how the crowd reacts, how the traps are set, how even the cleanest setups can be tools of manipulation. And now here you are, at the center of the arena. Not as a victim, but as a player. But this isn't about information anymore. It's about identity, because the final transformation isn't in your trading plan. It's in who you become under pressure. When your edge breaks, do you panic? When a perfect setup fails, do you feel betrayed? When the market whispers, let's see who you really are, do you freeze or do you smile because you knew it was coming? Let's burn this into your mind. You are not a trader. You are a strategist who happens to use charts. You don't chase moves. You engineer outcomes. You don't follow setups. You build systems that exploit behavior. You don't react to price. You respond to intention. The invisible arena will never change. It will always be brutal, always be unfair, always reward the predator, always punish the prey. But now, you're not prey anymore, because you've seen behind the curtain and you finally understand why moving second is stronger than acting first, why randomness within rules is your armor, why commitment with detachment is power, why predictability is death, and most of all, why trading is no longer about proving yourself. It's about becoming someone who doesn't need to. So here's your 30-day transformation protocol. Week 1, awareness phase. Log every trade that felt like you're being hunted. Study how your stop got hit. Document your predictable behaviors. Become your own surveillance. Week 2, strategic absence. Skip 2 setups on purpose, especially the clean ones. Only trade the setups that happen after the trap. Practice being invisible. Disappear from the radar. Reappear where no one expects. Week 3, second mover training. No entries in the first 15 minutes of any move. Use the shadow protocol. Document how the picture changes after patience. Learn to see the game before you enter it. Week 4, identity reset. Change one core trading behavior. Trade a market you usually ignore. Reverse your entry habit. Break your own pattern before the market does. Become unreadable. Become untouchable. This isn't about another indicator, another strategy, another backtest. This is about training yourself to be the architect, not the victim. Zoom out. Slow down. Play chess while they play checkers. Because when you re-enter the chart, you're not looking for setups. You're looking for vulnerability, for emotion, for footprints of fear. And when you find them, you won't hesitate. You'll strike, not with emotion, but with intention. So now I ask you, what's your next move? Are you going back to old habits, or are you ready to build new instincts? Are you still reacting, or are you ready to play a game they don't even know they're in? Because this isn't just trading anymore. This is strategy at its most primal. This is where psychology becomes your edge, where silence becomes your power, where presence becomes your protection. And when you move now, you don't move for profit. You move for position. You move like a shadow, unseen, unpredictable, unshaken, because your next move isn't a trade. It's a transformation. Welcome to the other side of trading. Welcome to the invisible arena. Welcome to the mindset of the few who survive and the even fewer who win. Now tell me, are you the piece or the player? The game is on. Your move. You've made it to the end. But this isn't the end of a video. It's the end of an illusion. The end of trading like prey and the beginning of trading with power. Because now, you don't just see charts, you see psychology, you see pressure points, you see the traps and the timing and the invisible hands pulling strings behind every move. You're no longer chasing confirmation, you're stalking vulnerability. You're no longer acting on impulse, you're responding with precision. You've burned the boat, you've embraced uncertainty, and you've stepped into the mind of a strategist. Not because you learned more, but because you unlearned what was blinding you. So if this spoke to something in you, if something shifted deep inside, then don't let it stop here. Share this with the trader who's still trapped in setups while you've already stepped into strategy. Bookmark this video and come back, not to relearn, but to remember who you are when you're not reacting. And if you're ready to build this mindset into everything you do, join this channel. This isn't a place for hype. This is a place for depth, for the few, for the quiet killers, for the ones who trade the trader, not the ticker. Because in the end, this game was never about the chart. It was always about the player. And now you're ready. I'll see you in the next level. Until then, stay invisible, stay patient, stay dangerous.